Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, September 22nd, 2011 is sponsored by Realtik. All right, folks, we have a lot to discuss here. Markets at the lows of the day. Dow Jones Industrial Average is down 454 points. NASDAQ down 100, and the S&P 500 down 45. Basically 4% across the board, and we nailed this call. You don't need to know anything else other than that subscribers here at In The Money Stocks cleaned up with massive profits. Tuesday, I repeat, Tuesday was the cycle pivot date. I shorted the market with the members of the Research Center, with members of the Intraday Stock Chat. We knew this market was going to be tanking, and the key was to prepare with shorts and exit longs. And I talked about that over the last week, how we were taking profits on longs, and the cycle date came. We shorted. I bought SDS, which again is having a monster move. Check this out. This is the SDS here. It is up $1.90 today alone, folks. $1.90 today alone. And this thing continues to rip. My entry was $22.35. $22.35. That's back here. And look at it now. It's at $26.20. Almost a $4 profit on a $20 ETF, almost 20%. And again, if you took the free trial to the Research Center, by the way, there's a 7-day free trial, 7-day free trial to the Intraday Stock Chat. You've gotten amazing profits out of this. The social network is buzzing. It's the best social network on the web for traders, talking amongst themselves, using the proprietary methodology that we've taught, and they're using it to profit nonstop in any market, especially this market now as we nailed this move to the downside. So again, that's what's going on here. Let's go back and discuss exactly what happened here. Well, first off, you have to go to the daily chart, because the daily chart is really part of the reasoning. And I'm going to discuss exactly why we were able to nail this down move in the markets. I want to give you guys the ins and the outs that we saw, that part of the reason why we could call the short top, the cycle date, and everything else. All right. First off, you had a big drop here. What type of pattern is this choppy sideways up move? It's called an in spirit of macro bear flag. So again, bear flag means bearish. It's going to eventually fall. What you do is you connect the pivot low right here to the secondary pivot low to the third pivot low right through, and you know when you close below that white line, this market is done. It's going to collapse. All right, so in any case, let's take a look right here. See this little collapsing level? Yesterday into the close, you closed below it, folks. You closed below that level. That was the first close below you have had since the pivot low on August 9th, 2011. All right, that was the trigger right there. You knew this thing was going to continue today, most likely. If not today, it would have continued over the next few days, and we would be down. Now, you're actually hitting some support here at the 111.80 to 112 level right here, but ultimately, this probably goes back to this 110.27 low pivot on the SPY, and the SPY mirrors the S&P 500. So again, it's all the same at this point, and what a move here on the markets. But in any case, that was your bear flag and breakdown level. In addition, when you add the cycle date was Tuesday, which was this day. Right here. This was the pivot top, all right, based on our proprietary methodology that, again, hedge funds pay us millions for, but we give to our subscribers as well in our tight-knit group here at InTheMoneyStocks.com. That was the day. That was the day you shorted the market. Look at the results. If you shorted the market at the highs like we did, the spiders were trading near 122. You're now in 2 days $10 lower, almost a 10% drop in the markets from that point. Think about how easy that short was. Even if you don't short, and even if you're just in mutual funds on the long side, all you have to do is exit and go into cash, and you just saved yourself 10%. 10%. You don't make that. I mean, that's 2 days. 2 days, 10%, no less. In any case, folks, these are just a couple of the reasons why we knew this market was going to fall. And again, join us here in the Money Stocks, 7-day free trial for the Research Center Intraday Stock Chat. Come learn the secrets of the pros. We're here, and I'm glad to teach it to everyone willing to listen. And again, I don't hold anything back. I'll teach it all. In any case, let's go back to the intraday. Markets continue to break lower here. And again, I'm still holding on to my second half of SDS at this point. Target will be getting closer as we kind of continue down here. But the market, again, is just getting crushed. Dow is down 478 points now. NASDAQ down 105. S&P 500 down 47. Now, I'll tell you this. We're swing traders here at InTheMoneyStocks.com. I don't care if the market goes up. I don't care if the market goes down. I'm making money on the long side, and I'm making money on the short side. And again, soon I will be looking to buy some longs for a bounce and swing trade those to the upside and make more money on the upside. And then when it gets ready to short again, we're going to short it again. This is what you do here. This is how you have to play it. Okay? And again, we're here to teach you, so join us here. Research Center is probably what's most applicable to most of you out there that are more working during the day. That's why you need to be in the Research Center. Videos every night, swing trade alerts live, text message alerts, email alerts, daily market reports, hot charts and alerts, you name it. It's all included there in that Research Center. All right, let's take a look at a couple other things. So again, worries out of Europe. China really was the catalyst. Yesterday we had the big dump on the Federal Reserve, right? I mean, that was what happened right here. All right, so yesterday Federal Reserve comes out. They don't do enough QE3 or barely anything they do. Market was expecting and had factored in a lot of QE3. Didn't happen. Market starts to sell. Then last night, China comes out with some economic news that just was not up to par. It just didn't. It just was not good enough, frankly. I mean, it was showing that China's slowing. Europe is very dependent on China to buy things from Europe, and there's a big connection there. And once that happened, and once this news came out in China, Europe started to crumble. Europe crumbled 4% or so. Now the U.S. markets are doing the same. Spiders are again continuing lower here and absolutely breaking down. And it's just a beautiful thing when you're short the market or in cash like we are. And again, that's all you have to do, folks. Just understand the charts, read the charts. They tell you everything. I always liken the charts to a book. It's just in a foreign language. So imagine if you get a book in a language you don't know. If you can learn to speak that language, you can make millions. Okay? In any case, markets again breaking down. I'm going to zoom out here. I'm going to show you where this market could be going. And again, if we zoom out quite a ways, this is really the first target right here next, which is the 111.35 level. So we may head down there. We're bouncing a little bit right now just because we're right around this other area of support, but 111.35, 30 area, and then if you take that out, you're going to go to the 110.27 level, which will be a pivot double bottom. Ultimately, the markets will go through that level, but you probably get a bounce off the low pivot here at 110.20, 110.25, somewhere in that vicinity, right around the low 120s. You probably get a decent bounce there, okay? Now let's take a look at the 60-minute chart. 60-minute chart, the head and shoulders, again, an amazing head and shoulders that continues to just be a beautiful play. If we can get the charts up here to pop up, and they're just taking a second. All right, so there we go, guys. We got the 60-minute chart up, and this is, again, 60-minute on the SPY. Look at this head and shoulder pattern. It bounced off here, bounced up, and is now completing to the downside. And ultimately, again, remember I talked about the 110-ish area of being support. If you get through the 110 level, you're going to go all the way down to the 104-ish level. And that'll be the target of the head and shoulders here to play out to the downside again. So, yeah, you're going to have bounces along the way. I'm going to be short again. I'm going to be long again. I'm going to be short, making money on both sides of the market. But ultimately, this market is heading lower, probably to about 104 to 102 on the SPY. And again, that will be at that point a dramatic collapse on the markets, guys. I mean, you're looking at big downside here, potential going in, and at some point they'll come out with a bigger QE3 or Europe. My guess is Europe will do something bigger if we continue to collapse here in the markets, but it's there for the taking. And again, huge profits. The social network just continues to be chomping at the bit as they continue to eat up the profits. And again, come join us. If you take the Research Center, if you buy the Research Center, if you do a free trial, you don't get access to the social network where you're going to be able to talk to all our other traders. But if you take the free trial and then convert it into and continue as a member, you will have full benefits of the full social side. All right, it's the Facebook of traders. Traders tell us they're on it way more than any other social network out there. In fact, it's the only thing they're on, chatting 24/7 about charts, posting chart patterns. And again, it's a one-way. Not only are you going to get the expert here of the chief market strategist at InTheMoneyStocks.com, you're also going to get access to all those members as well. And again, take that free trial. Come join us. Start making money because, again, our pockets are being padded here, and it's there for the taking, folks. There should be no one out there that didn't see this move coming. If you didn't see this move coming, you got to step up and join us. All right, guys, take care. Let's make some more money. Market's got a little bit of a bounce back above 112. We'll see if we head a little bit lower by the end of the day. We should be near the lows of the day, though. If you see this daily line right here, this is actually good support right here. So, again, this looks like it may hold today. Maybe tomorrow we touch that 110-ish area. I would not be surprised at that area of being possibly hit tomorrow. Take care, guys, and again, come join the pros and start profiting with the pros.